discussion. I mean, if you are praying that I go to Australia, thank you for those prayers.
It's very easy for you.
No, it's not that easy, bro. Yeah. So I like such positive things. Thank you.
ਚੌਥੀ ਜੀ ਕੀ ਪਾਤਸ਼ਾਹੀ ਦਸਵੀਂ ਪ੍ਰਥਮ ਭਗਵਤੀ ਸਿਮਰ ਕੈ ਗੁਰੂ ਨਾਨਕ ਦੇਵ ਧਿਆਏ। ਫਿਰ ਅੰਗਦ ਬੁੱਧੀ ਅਮਰਦਾਸ ਰਾਮਦਾਸ ਹੋਈ ਸਹਾਇ। ਅਰਜਨ ਹਰਿ ਗੋਬਿੰਦ ਨਾਮ ਸਿਮਰੋ ਸ਼੍ਰੀ ਹਰਿ ਰਾਏ। श्री हरिकृष्ण ध्याइया जिस डिठा सब दुख जाए। ते बहादुर सिमरे घर नाम नितावे धारे सब थाई हुई सहाय। दसवें पातशाह श्री गुरु गोबिंद सिंह साहिब जी सब थाई हुई सहाय। दसां पातशाहियों की जोत श्री गुरु ग्रंथ साहिब जी के पाठ दीदार का ध्यान करके बोलो जी। ये निमाणियां दे मान निदानियां दे दान निरोटियां की लोड़ धन धन श्री गुरु ग्रंथ साहिब महाराज सच्चे पिता वाहिगुरू जी को इस वेले आप की बेहद अरदास बेनती जोतरी है। आप जी के दर करते बेईमान सेवक यंग प्रोफेशनल ग्रुप वालों जो आज प्रोग्राम किया जा रहा है कृपा करनी जी। समूह प्रबंधकों सेवादारों के सिर ते मेहर भरिया हथ रखना जी। इस विच कामयाबी बख्शनी चढ़ती कला बख्शनी सिख पंथ की सेवा करने की बल बुद्धि समर्था बख्शनी जी। इस वे कृपा करो कि यह समागम आरंभ करने की आज्ञा बख्शनी जी। अखर वाधा घाटा जो मुआफ करने सर्वाते कारज रास करने सेरी प्यारे मेरे चिरंतरिया तेरा नाम चिंता बै नानक नाम चढ़ती कला तेरे भाने सर्वत दा भला। वाहिगुरू जी का खालसा वाहिगुरू जी की फतेह। बोले सो निहाल सत श्री अकाल। वाहिगुरू जी का खालसा वाहिगुरू जी की
has an impact on business and the economy. The Annual Finance Act changes multiple provisions across different tax laws, for example, the Income Tax Act, VAT Act, Excise Duty Act, Tax Procedures Act, Miscellaneous Fees and Levies Act, and the Tax Appeals Tribunal Act, etc. Hopefully you all accountants prior to the end of. Often accountants run into clients who never want to pay taxes or just completely avoid it. However, a successful business that has generated income does in fact pay taxes. The latest controversial act has been passed is the Housing Levy Bill and the increase in petroleum prices, but I'll let the panelists handle that one. Our event today highlights the impact on business and the economy. I'd now like to welcome the YPG coordinator Pravrat Singh Sira to come up on stage and address you. Thank you.
Thank you, Kiran. Waheguru Ji Ka Khalsa, Waheguru Ji Ki Fateh. Respected trustees of the board, President of ERB, Mr. Surinder Singh Sira, Governing Council members, Chairman, Sikh Council Africa, Chairman, Siri Gurdwara Ramgarhia Railway South Sea, esteemed panelists, ladies and gentlemen, all protocols observed, good evening. It is with great pleasure and honor that I extend a warm welcome to all of you on behalf of EARB's Young Professional Groups, YPG for short. Today marks a significant moment as we gather here for a distinguished panel discussion and YPG's inaugural event, where we are privileged to have in our midst not only our esteemed panelists, but also our respected president, dedicated trustees, valued members of our community, and invitees. To give a brief recap, the Young Professionals Group is a newly formed affiliated body of the East African Ramgarhia Board that was created as part of EARB's devolved management structure. The Young Professional Group consists of 35 members, 15 of which form the steering committee, comprising of a myriad of professionals ranging from actuaries to lawyers to business owners, all working in their respective industries. Our primary mandate is to be a professional support system for EARB, which is further outlined in this 5-pronged structure. 1, to act as an advisory council to the board. 2, to provide mentorship, guidance, and advice to the youth and the Sangha as a whole. 3, to host industry-related forums to foster growth and help shape the future of young individuals. In this regard, we will be hosting a Careers Day on Saturday, 23rd March 2024, here at the Gurdwara, so look out for our posters and for more information. To create succession frameworks, offering forthcoming generations a strong support system and access to a network of key professionals for sustainable and holistic development. And finally, 5, to harness collective potential and implement a robust system for our community while nurturing and encouraging the involvement and participation of young members towards the Gurdwara and the community as a whole. To our esteemed panelists, your expertise and accomplishments in your respective fields have brought you to the forefront of today's discussion. And we are truly grateful for your willingness to share your insights with us. Your presence enriches our event and promises an engaging exchange of ideas that will undoubtedly inspire us all. A special welcome to the President of EARB, Mr. Surinder Sira, whose visionary leadership, coupled with the Governing Council support, has been the driving force behind the success of this institution. Your dedication to our mission and commitment to excellence continue to guide us towards new horizons. We are honored to have you here today, sharing this platform with us. I also would like to extend a warm welcome to our esteemed attendees and members of EARB. Your active participation and engagement are the lifeblood of our institution. Today's event is an opportunity for us all to come together, learn from one another, and strengthen the bonds that make our community so close-knit and well-united. As we embark on this panel discussion, I encourage everyone to actively participate, ask questions, and embrace the knowledge that will be shared. Let this be a forum where ideas flourish, connections are strengthened, and collective wisdom propels us towards greater success. Once again, thank you to our distinguished panelists, our President, Governing Council members, trustees, and valued members and attendees. Your presence here is a testament to the collaborative spirit that defines our institution, and I am confident that today's discussions will have a lasting impact on each and every one of us. Thank you, and let the enriching dialogue begin. Waheguru Ji Ka Khalsa, Waheguru Ji Ki Fateh.
I'd now like to welcome our panelists on stage, and Sahib and Sachi, please.
Good evening, everyone. Waheguru Ji Ka Khalsa, Waheguru Ji Ki Fateh. Very nice to see everyone in the room. A lot of anticipation on what we are going to witness here today. So just briefly, I am a moderator for the session along with my co-moderator Sachi. And we won't really spend a lot of time discussing about ourselves because we are eager to welcome the panel we have today onto the stage to get the discussion rolling. A bit of background, I have a bit of a finance background that makes me well positioned, I believe, to talk to our panelists today. And I look forward to the engagement, and maybe Sachi can say a word.
Hi everyone. I studied accounting and finance, but I came back and now I kind of work on more sales, operations, and in Aga Khan all the time meeting doctors. So I'll bring something different to the table, but it's really nice to see all of you here. Welcome.
Yes. Where is the mic? All right. Thank you. Good feedback. Right. Sachi, you can have a seat. Yeah. So allow me to take this opportunity to welcome our panelists on stage. And to begin with, we'll start with Mr. James Karanja, tax expert and associate director at Anjawala & Khanna. Please give him a round of applause as I introduce him. So James is a tax partner and associate director at Anjawala & Khanna and a member of the tax department. He specializes in international tax matters, transfer pricing audits, investigations, tax policy, and legislative reforms. So once again, a round of applause for our expert here. Next on stage, I'd like to invite Ishi. So Ishi Kalsi, who is an advocate of the High Court, is also here to give us a legal perspective. Ishi is a member of the Sikh Council as well as certified professional mediator. She is the co-convener of the Sikh Council Women Empowerment Committee and holds an award of women's rights from PAMI. So thank you, and Ishi, and once again. Next in line is Sandeep Singh Main. Please make your way to the stage. A round of applause. He is a tax partner at KPMG East Africa. Sandeep, being a partner there, doubles up as KPMG Private Enterprise Lead, focusing on private, mid-market, and emerging family business. He has over 12 years' experience in tax. So a lot of family business owners here, so I'm sure you'll have many questions for Sandeep. Next in our list of panelists to come on stage will be Hardik. So Hardik, please come over to the stage, a round of applause. Hardik represents Dava Life Sciences Group. He's a practitioner in finance, so we look forward to seeing his views on the impact of Finance Act on his work. Over 17 years in audit, tax, and finance experience. He specializes in tax planning, financial operationals, and balance sheet restructuring. So an in-house expert, and a round of applause once again for Hardik. And finally, on the list of experts to welcome on stage, we have Fred Gitonga from PKF, everyone. So some of us may already know him. He's a consultant in tax. He's experienced in tax advisory and due diligence, tax health checks, compliance works, and in-depth examination and audits by the Kenya Revenue Authority. So I think members in the audience again will be very interested to hear his views on how to deal with the KRA. So thank you very much, and once again a round of applause for our full panel that has joined us here. So I hope the mics are working. We can do a quick check so that the audience can hear us without any problem. All right, so I'll start the questions for the panel this evening, and we'll start off with our tax consultant Sandeep Singh Main. And in part one of this session, we're talking about the introductions. So basically for members of the audience to get a bit of a glimpse of what is the Finance Act and what it does to our society every year as it comes out. So a bit of introduction there. So Sandeep, from a tax consultancy perspective, what are the key provisions of the recent Finance Act and how do they differ from previous acts?
Yeah, thanks a lot, Saib. Good evening, everyone. So maybe I'll begin by saying that the Finance Act does change every year. So every year from time immemorial, you have first what we call a finance bill. When the finance bill is out, we then have public participation, meaning you all have an opportunity to go through the different changes in the bill before it becomes an act. Now, unlike the previous years, this time around, 2023 has been the highest participation in the decade I've been doing tax. We had over 1,000 people actually going to the Finance Planning Committee, to Parliament, to present the different issues they were upset about. But like someone said, this time around, I think all of us got a certificate of participation because a lot of the changes that we had proposed never came through, and whatever the government had decided to do actually came through the Finance Act. Now, that being said, there were a number of changes that were coming through the Finance Act 2023. I think the first one and the most notable one is the amnesty application. In the past, if you make an error, you would be assessed by KRA, and you would pay the principal tax, but then you could apply for an amnesty for the interest and penalties, which means that you did not need to pay it. One of the key changes that has come through the Finance Act 2023 is that going forward from 2023 onwards, any tax that you have not paid or declared, and there's any interest and penalty on that particular tax, then you need to pay the entire amount in totality going forward. There is an amnesty, but it is only up to December 2022. So a lot of businesses are trying to clear out the principal taxes and try and get an application, a waiver application for the past up to December 2022. So I think that one change is really important. The other one that I think is important for this forum is the taxation of trusts. Remember, trust income is not taxed, and in the past when you do alienate, meaning you do separate from a trust or sell some of your shareholding in a trust, a family trust, it was not taxed. But now the Finance Act has brought in a provision that if 20% of the value of the transfer is 20% of the immovable property, which is your land and building within the trust, would then also be subjected to tax. So that's another very key change. And in line with going through the digital market space, you remember they started taxing the digital market space. So if you do have products that you're selling on a digital platform, in 2022 we had already said that you need to pay tax. In 2023 they said that, look, if you're doing a content creation, and we do have people who are influencers, we do have people that create a lot of content even within the community, then would be subjected to withholding tax at 5%. The issue is that is not final tax, it's actually what someone is going to withhold, and then you will have to declare tax at a full rate of 30%. For me, the one critical one that has come and is effective in 2024 is ETIMS. Everyone heard about that? Is there anyone who doesn't know what ETIMS is? Because then we can discuss that as part of the second questions. But ETIMS, now today, you cannot trade without an ETIMS invoice. Whether you raise an invoice of 1 shilling or you raise an invoice of 10 billion, you have to be registered through ETIMS, and there are different ways of registration. So that's one very critical change. And the importance of this is that you as businesses that deal with, say, the informal sector, and they do not give you an ETIMS compliant invoice, that means you will pay tax on that supply. I hope we are clear. And I think the last one really is around the withholding tax and the withholding VAT. Most businesses are withholding VAT agents. The timelines have changed from the 20 days to 5 days, and I think it's really causing a lot of grief in terms of the time that people spend in then complying with the law. So I think, Saab, those would be the really key ones from the Finance Act 2023.
All right, thanks Sandeep for sharing those views. A couple of good points there in terms of the provisions on amnesty, on trusts, on the digital landscape, on ETIMS and WHT. So I think that leads to the follow-up question to Fred, also a tax consultant. How do these changes affect the tax landscape for businesses and individuals? So you have these provisions that come in. How is it affecting the businesses from your view?
Oh, sorry for that. Thank you for your question, and good evening, everyone. All right, so it has been put forward in every cycle where we have the Finance Act. Remember, it brings across various changes which will have its impact when it comes to the arrangements between the businesses. And one of the major landscapes which, one of the major changes or impacts which these changes comes about with, when it comes to businesses, we have the cash flow issues, because remember these changes now, it has affected the cash flow of the entity. Let's say, for example, you have a company and it has employees, and we are all aware of the controversial housing levy. Remember now, previously this housing levy was not there, but since now it came in, even though the court has already stopped it, we have seen the parliament making it fast to have the affordable housing bill passed, and now it has been passed to the Senate. So we will check on the development of that. But with the housing levy coming in, remember now employers have to match whatever the employees are being deducted. So that was something which was not already there before this housing levy came in. So it's affecting the cash flows issue of many businesses. And another thing is you'll find the businesses which are dealing with either accessible services or goods, where now they are required to remit this excise duty within 24 hours. And point to note out is that when you're dealing with accessible goods, first is that you have to pay it to KRA even before you get your goods outside there. So it leaves many businesses in a dilemma where they're not sure whether these goods, whether their customers will buy it on credit or they're going to pay them on cash, but you have to remit it in advance within 24 hours. The next landscape which has been brought in is in terms of compliance. There will be increased compliance, of course, with the e-teams, which has already come in. Now every businesses will be forced to comply with it, because if you get an invoice which is not generated over the e-teams, this expense will be disallowed on your tax computations, even if it is a genuine expense which has been incurred in the production of your income. For individuals, what is coming in is that there will be reduced disposable income, because also, as you note, there were changes which were brought in to taxation of employment income, where the tax brackets were increased to the highest of that 5% for those earning above 800,000 per month. So when that effect came in, then you see more people are being taxed more, and at the end of the day, they are being left with minimal income in their pockets, and also with the continuous rise in cost of living, which now leaves the individual or an individual in a situation where they are being taxed more, and the cost of products are also increasing, leaving them with less money in their pockets. Thank you.
I thank you, Fred, for that perspective. And my next question is to our representative from industry, Hardik. And Fred speaks about many stresses on businesses. He's spoken about cash flow constraints. He's talking about compliance issues. And from a finance perspective, I mean, your staff have a morale consideration as well with strained personal budgets. So the question to you is, what has been the immediate implications of these changes to your company's financial strategy and operations?
Thank you for that. Good evening, everyone. I think immediately it straight away has a cash flow impact, like Fred has said. The bad downside is now you've got to start planning as to how fast. So typically paying withholding tax in 5 days, where you had 20 days to pay, you could plan out your cash flow. You literally need to go back in the market and start having an aggressive collection policy and say, look, I need the money to be able to pay this back. So that's obviously one of the things. Again, the amnesty, which is a very welcome move. So it was a good time for us entities to go back and say, look, if there is any taxes that have missed out, let's get this done, pay the principal, and wait for the amnesty certificate to come through. So that's one of the welcome changes that have come through. But the cost obviously drives up. You're now paying more housing levy, which means, again, hitting your cash flow. You're taking out more money out of the company, increasing expenditure. Eventually, the effect is going to be most industries are going to then pass pass over this cost on to their customers, which means that you're going to rise the cost of living, because you can't sustain that level, so you would eventually have to pass this cost on to your customers at one point. I think on the e-teams, the biggest impact is, you just literally now have to go back and find registered VAT suppliers and have to deal with them and deal with the added cost, which again boils down. So in terms of changing the strategy, I think how we're going to look at businesses going forward in terms of managing your top lines, your margins, your net profit margins, your EBITDAs, I think that's where this will immediately come and take a hit straight away. So it goes back to the drawing board to say you can't plan. And the spanner in the works, which is again not tax and maybe not the right place, but then you've got the whole exchange fluctuation, which tends to eat into all of this. So it's not just tax that you need to worry about from a corporate side, you're also worried about what's going to happen in the market. I know the dollar's been very good the last 1 week, but that's no consideration to say it may not go up and down again.
Right, thank you for sharing that perspective. And Hardik speaks about a lot of legal matters. We're talking about e-teams, we're talking about amnesty, there are deadlines, there's repercussions. So James, our legal expert here, what are the legal implications of the key provisions outlined in that Finance Act, particularly in terms of compliance?
Yeah, so sometimes the hand of the law, it gives with one hand and then it takes away. And so one, I think we really need to be quite aware of is the provision on amnesty given for this period is one thing. It seems to be a gift. But remember, what is the converse of that is that KRA is going henceforth to lose the discretion to waive. So meaning any mistake you make going forward becomes quite a costly factor. So in the past, the auditor came, the KRA auditor came and for full disclosure, I worked at KRA for about 15 years before I moved to consulting. But it means if they came and they now identify a mistake, the auditor comes and identifies a mistake, and this was not something you had anticipated, in the past you would pay the principal tax, seek for waiver of penalties and interest. Now that being taken away, that discretion, I think is quite a punitive measure, and we need to be quite aware or alert to think about that. I think as far as procedures go, we see more entrenching in the act of KRA wanting to get more and more into the real-time business space, to get information on a real-time basis. Before they amended the law to say withholding tax be paid after 5 days, it was meant to be initially after 24 hours, and they want to have, to be aware of what the transactions on a real time, so that this information is going back to a database in KRA. And so this is something which is, I think, of real concern, that about how you want to factor your compliance, that you must be aware now KRA wants to be a bit more intrusive, a bit more involved on a day-to-day basis on what's going. We've seen the other element on compliance is they're having a lot of foot soldiers running around, coming to knock on doors to see what you're doing, to look at the sort of invoices that you're issuing. Are they ETR? Are they? So there's a very, very keen interest to entrench people in the field. So even where they talk about iTax and wanting to be more system-based and have less contact, we know obviously there are those issues that come with more contact between KRA and the public, is that then there's exposure now for other rent-seeking and things which are clearly not pleasant. I think really what I want to focus on a legal perspective is this issue that has been addressed on public participation. Yes, this was the record for the first time because of the ambition of the new regime to try and stave us off from a financial crisis, a debt cliff. They're really, really keen to mobilize tax. But what does that mean? the role now of us as a public in inputting into decisions that are made. We can't just wait for 5 years to say who we choose or not choose, is that we must be more actively involved. And one thing we just want you to be, I would like you to be conscious of, is there's now a national tax policy. So we've been engaging government around a document, a policy document, which is to say, because of how erratic changes have been to the finance bill every year, they can change the income tax law. So we need more stability. So there are certain provisions or certain commitments government have held themselves to say they should not change policies every, more than once every 5 years. Will it happen in practice? From a legal perspective, it helps us to be able to go to court to say, certain standards were not met, of public participation, of you said you would review this from time to time, So the national tax policy, unfortunately, still needs to be aligned with other things like the medium-term revenue strategy. So there are still a lot of things that need to be aligned, but what the big takeaway from all of this is that the law does give us, as a public, the opportunity to say, this is how we want to be taxed, this is what we feel is right, this is not appropriate. And questions, maybe the big question, what is the remedy for when government takes 1,000 views that say, let's not go this way, and then they take things in that other direction, so what's our redress? So I think real pertinent questions for us, and going forward, what we see in the coming financial bills, that we really must now begin to engage.
All right, thank you, James, for that comprehensive response on the legal perspectives behind Finance Acts. I think you capture quite a lot of sentiments there in terms of having a tax policy for our country, the medium-term collection and debt repayment, and the erratic experience we have been having over the last couple of decades. Maybe an add-on view from you, Ishi, in terms of your practice and any enforcement-related issues you have faced in terms of changes that came through with this Finance Act.
Thank you, Sahib, for that. Good evening, everybody. In terms of the changes, there have been a lot of changes, but for me, I think, Sahib, the main question is, what about the challenges that we are facing with this act? When we look at it, most businesses, whether it's startup businesses or big businesses, they do have the backing of legal and tax experts. So in a way that, the way this panel is formulated, most businesses do have advice from legal and tax experts. But the biggest challenge that probably comes about is with the Wanjiku, the Common Wananchi, an interpretation of this Finance Act with, the common people. Looking at this act, it's a very, very technical act. Even the language used, it's very technical in terms of, it's all about finance, it's all about legal language. What does it mean for the common people? How do the common people then interpret this law and this act? So I think for the government to have just thrown this act on the people and then started implementing it was also doing a lot of injustice to the common people. And the biggest challenge now would be basically to now take this to the grassroots level and educate and make the public aware of what this act is. And even as the panelists here are talking about the finances, I can see a lot of blank faces in the audience because it is too technical. So how do we now explain this technicality to the common people? And this is one of the greatest challenges that I even find when we are talking to our domestic staff and we're talking to our, house helps and all. And you tell them, you have to pay statutory taxes. And they don't understand why the government is taking their money. So I think one of the greatest challenges with the Finance Act is the technical language, which needs public awareness and public education. Thank you.
Thank you for your views, Ishi. And I think for the experts in the room, there is window before the Finance Act 2024 comes for us to improve how we are able to communicate future changes to members of the public, especially at the grassroots. So to the audience, that completes the first part of our discussion, which was basically an introduction and overview of the Finance Act of 2023 that brought in provisions as recently as 1st January. And we move over to the second part, which will be hosted by my moderator, Sachi, which talks about the impact on business of this Finance Act.
Thank you, Sahib. Thank you, panelists. So we're going to touch on the impact on businesses. I'm going to start with Fred because he's sitting next to me. Fred, are there any specific provisions that businesses should be aware of to optimize their tax strategies?
Thank you, Sachi. Yes, with the Finance Act, in every cycle, it doesn't mean that it all comes with everything bad. So there is also some good in it, where even as much as these changes keeps on coming in, remember even the government has to make sure that Kenya becomes productive and also attractive to even the foreign investors, and also give its citizens for them not to be able to enjoy their exportation of taxable services were zero rated by the government. And what this means is that for these services that you are offering to non-residents, this will be vatable at 0%. Remember before that, export of taxable services was taxable at 16%, which would make our services unattractable to the outside countries or the recipients who are outside Kenya, because this will mean that your cost of providing that services will be more expensive, because even from the other end, they will also have to account reverse VAT if they also have those provisions in their country. And good thing with the zero rating of these taxable services, as the provider of such services, you'll also be able to claim input VAT that you have incurred in the provision of such services. Another tax strategy which business could familiarize themselves with is when it comes to refund, especially for VAT refund with regards to bad debts. Previously, you'd have to make your application within a 4-year period, but what the Finance Act did is that it extended the period up to 10 years, where now for you as a supplier to let's say a business which has been put under statutory management, either under administration or even a liquidator, once now such kind of a business has been put under statutory management, you as the supplier now can lodge a refund application with KRA as a result of that bad debt that you had already incurred and you have not yet been paid. And what KRA will do with that is once you make that application, they will come and we have, from the recent application, you have noted that KRA, mostly they would like to offset against any liabilities that you have. And with the balance, what they will do is that they will credit your account so that now you can utilize it further on your any future VAT liabilities that will arise as you continue doing your business. And maybe lastly, another thing is on capital allowances. Remember, we still have to make Kenya attractive so that now whoever now wants to inject huge investments in the country can be able to enjoy these capital allowances. So what the Finance Act 2023 did is that it also included any machinery that is used in agriculture. Remember, agriculture contributes more than 20% to the GDP. So to encourage players in the agricultural sector, any machinery that is used in planting, grooming, everything with regards to agriculture, so that has been included into the capital allowances. Another thing is we have seen construction of the Lamu port and revamp of the Kisumu port. So any investor would like to come in and set up any ports into the country. Even the docks have been will also be granted allowance at the rate of 10%. And any other investor would also like to come in the telecommunication sector. If you like to set up any telecommunication works, come up with the structures and any other earthworks and civil works in relation to setting up such kind of telecommunication equipment, the same has also been granted to the capital allowances. And also, lastly, for investors who would like also to dwell in refining business, also refining any other building and machinery that is used in refining, that has also been included to be part of machinery, machinery used for manufacture, and that will also be granted capital allowances. Maybe I think to point out is maybe there is a need by the government to make sure there is consistency in how they apply these rates, because this year you might find out that they have set these capital allowances, especially for the investment deduction, at 100%. Then another time you hear them setting it at 150, then taking it back to 100% like the way it did with the Finance Act 2023. Maybe now with if the national tax policy comes in, or if there need to be a consistency with the government, we need to have a certainty from the government on how these rates would be applicable. But yeah, these are the kind of allowances which were brought in by the Finance Act, which now will give an opportunity to the investors to come and claim their investment that they've already incurred. Thank you.
Thank you, Fred. I think that was quite interesting because majority of our Sangat is into agriculture and into construction. So I guess try and find Fred and catch him for a question. Over to you, Sandeep. How do the taxes outlined in the Finance Act impact businesses, particularly in terms of compliance, tax planning, and overall tax burden?
Yeah, thank you for that question. So, look, we all understand tax is a burden for most businesses, right? Who wants to pay tax willingly? Anyone in the room? No? So tax generally is a burden on businesses, but really necessary for the growth of the country. Remember, from our budget, a majority of the amounts are really, the financing of our budget is really done from tax revenues as well as then from external and internal borrowing. Now, some of the measures I think that came in, and I think Fred has really talked about a lot of the nice things to have, but we can still do a lot as taxpayers if you lobby for changes in the Tax Act. It starts with understanding how does it impact your businesses. So a simple question like ETIMS, I mean, did we think how ETIMS is going to impact our businesses? If you're operating, say, I don't know, in the hotel industry, for example, you do buy a lot of your produce from, small people, small traders. These traders do not even understand what is ETIMS. For them, they're making a sale to the hotel, they expect to be paid, and they move on with life. They go back to their farms, they go and get more produce and take it back to the hotel. That's how it works. But I think the education element is what would impact businesses. So if a business knows that they need to comply with ETIMS, then even a business can tell its supply chain that, look, and this is really a social impact, right? I mean, you don't have to do this, but you could tell people that you're trading with, as opposed to telling them, look, if you can't give me an ETIMS today, don't deal with me. You could tell them, let me educate you on how ETIMS work, because you're all getting educated today. You could go to them and tell them, this is how ETIMS works, so that you continue and do not disrupt that particular supply chain. That's really important. I think for me, the main thing is really around one of the things that was not mentioned is interest restriction. So before 2023, if you borrow locally, and I don't know how many of you have borrowings, but you are restricted in terms of the amount of interest you could take a deduction from a tax point. So from an accounting point, you're okay. It's a normal business expense. You can borrow money from the bank, pay the bank, and take that interest as a normal expense. But the Act changed in 2022 and said that any interest or any interest that you pay locally or foreign, you need to pay tax on it, additional tax, if your companies are in losses. Then the Act changed again in 2023, then to restrict. So these changes that I think James was talking about, so it's again now back to the whole business that if you're a local business and you're borrowing locally, then we will not restrict the deduction of that interest even if your business is in a loss, which is really important because they're trying to shore up local borrowings. But the issue is the banks. I mean, banks do not, I work a lot with family businesses, with startups, and banks do not want to give loans, especially if there's a high risk involved. So the startups are still, the family business go to family members to borrow, but they're not doing it right from a structure perspective. I will go to my uncle or to my dad and borrow 1 million shillings, put in my business. There's no form of agreement. In the books it's shown as debt. Next thing, you have Revenue Authority knocking on doors and saying, what's the source of this income? So you need to ensure, even from a record keeping, it's now in the law, by the way, 2023, you are required to keep proper records. So I would urge businesses to take care of that. I think the one thing we have not talked about really from a business impact perspective is the ESG agenda. We all make a social impact. Businesses, they are donating to, say, charitable organizations. I mean, the businesses here could be making donations to the temple, but they're not documenting it. It might not be a tax deductible if the temple is not a tax exempt entity, but you are making a social contribution. How is that money being used? You need to know that data. And I tell you why. You can get grants for it. From an ESG, there's so many private equity firms and venture capitalists who are looking to pump in money into businesses that are in line with the ESG agenda, and they give you grants. Grants in Kenya is like donation income, and it's not taxable. So I think that's something that businesses could think about, and within the tax laws. And the last one, or the second last one I'll talk about is really on the iTax integration. I don't know how many of you know, but your existing iTax is going to change very soon. The government is preparing a new system. There was some notice in the papers sometime in November. So your entire data that's currently on iTax, all of you know iTax, I'm sure, because you all must be having a PIN. That data is going to migrate to a new system. Already we have challenges from a legacy system moving to iTax. That data has not yet migrated, and some businesses have received assessments saying that you owe the government 300 million, 400 million for legacy issues, which have got nothing to do with the current iTax, but the movement is what I'm saying. So you do need to take control of your business, is what I'm saying from a tax point, and then ensure that your iTax ledgers are clean, up to date, take advantage of the amnesty if you can, so that going forward you remain highly compliant. And then finally, I think just on the social housing levy, if you don't mind me talking about it briefly, although it's now with the Senate and they have called for public participation, do we even know what that bill talks about? We don't know. We need to then invest in ourselves to understand what is that bill, if passed, going to mean for me. I have an opportunity to say no to some of the provisions today. For instance, and we are doing this from a KPMG perspective for startups, the housing levy bill talks about employees, the 1.5% and 1.5% employees. That's not new to us. But if you're a new business and you do not have any employees, you as a founder also do not draw a salary, the proposal in the bill is that you will pay tax, the housing levy, 1.5% on the gross emoluments, meaning the gross income of your business. Does that mean they're going back to minimum tax, which is by they squashed? So if a business is in losses, I'm still going to pay a tax. Those are some of the provisions we are saying, let's understand and say no to before they become law. But I think those are really some of the critical ones for businesses to think about. Yeah, thank you.
Thank you so much. I think that was super educational on all fronts. And I think what we could take back in terms of also, because we're here to do SEVA, is, like you said, educating all levels on the implications. Okay, so next we'll over to you, Hadik. So how do the changes outlined in the Finance Act align with your company's strategic financial goals and objectives?
I think the changes, and like Sandeep has said, that the changes have been so many lately that constantly you're keeping abreast, with the changes. Typically, interest restriction is one of them, where I know you talked about the EBITDA restriction on 30%, but again, the rule changes this year in 2024 again, where now they've removed to say all interest on local borrowing is now allowable. So it's constantly, when you say revamping your strategy, I think it's a daily thing or more like a monthly thing, and you're monitoring constantly to say, do I have this rule applied today, and is it going to be applicable tomorrow? And those are, I think, some of the things which, again, I know was touched to say in terms of legislation, but yes, it's a way where now you're going to have detailed analysis done. Whether it's monitoring this rule of the interest restriction on a month-to-month basis, or even something as basic as trying to make sure your iTax is matching to actually what you paid. So we've had instances, I know, with a lot of, in fact, just for all of us, if you've not filed your personal tax returns, they're due by 30th of June. So the way to look at it is to log into your iTax and figure out, is the PAYE paid by my employer, for example, is it reflecting on my iTax? And I think those are some of the changes individually we need to look at. Corporates also do that, whether it's VAT, whether it's income tax, something as basic as, trying to say, I have a refund, do I need to apply it? Am I time barred? Is it time to do it? So I think it's a vision that you have to say constantly changing, trying to see if the tax laws that have changed, how does it affect my business on a day-to-day basis? I think one more thing that we all tend to miss out is the public participation, which I think none of us are actively involved. I know the professionals are, but for corporates, I think we need to start looking into this to say, maybe we need to do a bit more lobbying, trying to see if, I know they might not listen to what we have to say, but it's one of those things that you say, I'll go ahead and try and make sure, at least I've put my word out there, and if it gets heard, and work with that. As a business, you've got to carry on, so it doesn't, the taxes will come, and then from there, you will decide, okay, this is how I'm going to change my strategy. I'm going to work on a cost-cutting model, or I'm going to go on a revenue growth model, or I'm just going to, decide and say, I don't want to increase business or exposure to certain levels. So I think these are some of the changes that corporates would tend to make.
Thank you for that, Avik. I'm going to move on to the legal experts, James and Ishi. We can start with Ishi. How do the legal frameworks within the Finance Act affect businesses' legal obligations, such as reporting requirements and tax compliance?
Okay, so one of the things that is very key in terms of compliance when it comes to employers, employers must make sure that they deduct the taxes, and basically by the 9th of every month. And if you don't, then you're penalized. And I think that is one of the key things that, by the 9th of every month, if you don't, then let me just see. Yeah, it is basically a payment of a penalty equivalent to 2% of the unpaid funds. So that is one of the statutory tax implications. Another one is the penalty for failing to pay the electronic tax invoice, to issue it. So basically, if as a taxpayer you don't issue an electronic tax invoice when you're supposed to, then the penalty is 2 times of the tax that is due. So those are one of the key frameworks and the key challenges, the key implications of the Finance Act.
I think just to allow me to also just react to some of the issues that have been raised. I think one of the things about public participation and our engagement, even as we talk about legal frameworks, is clearly the communication of changes. When we were doing constitutional reform, there was information in Swahili. So if a big part of the population is not able to read English and to understand it, certainly then we would need to make the case that for more people to be engaged, then this material should also be translated into Swahili. This is a requirement in other countries that have Swahili as a predominant language. And secondly, I think to the public participation question, it may be difficult for you as an individual business to do so, and which is where perhaps like the young professionals here would perhaps also provide, in a sense, a platform. When you see active bodies like Kenya Association of Manufacturers, what do? They invite a lot of us experts who are supporters of the organization to sit and debate and deliberate and come up with proposals that would then go forward that affect that particular community. So if this community finds itself affected by certain things, then it is also helpful that you also mobilize internally and have your voice be heard on issues, with a stamp that says these are the issues of this community in as far as this particular act is concerned, and then that structured engagement, I think, is going to take us a bit far. I think I just want to focus as far as legal frameworks and my own personal practice in international tax. Allow me, if there's just 1 or 2 people here, to just address any of you who are doing cross-border tax business, cross-border business, meaning you have a business set up across the border, either in the EAC and Mauritius, just to be a bit more aware that the government in successive finance acts have been strengthening the capacity to, one, better get access to information from other jurisdictions through the multilateral convention, mutual administrative assistance. In the past, there was things that you would perhaps fail to give KRA, and they have the ability now, and it's quite shocking to see the amount of material they have access to, quite independent of engagement, or obtaining from you. And then we see also, obviously, trying to tighten. There's one very harsh rule there, like if they were going to make adjustments to your deductions on withholding tax and reverse VAT on payments to your related party, that they would then, any payments you made in advance would not be deductible as against an assessment you're making. So I think that is also an area, if you are operating in the cross-border space, you want to be quite cautious of. KRA is a signatory or ascribes to OECD and all these issues about substance. So if you have set up a letterbox company, across the other side that is charging fees for one thing or the other, and there is no substance in that, just be aware that sort of the impact now in this regime and the changes that have come through the OECD and that the finance acts are continuing to adopt, you want to be quite careful about your substance in any offshore jurisdiction to ensure that those arrangements are not challenged. Big thing here, and it's been said, is just about taking advice about those changes and to see are there things that you need to be considering or reconsidering in the light of changes that have come up recently.
Thank you very much. I think that was quite insightful for all of us who are running businesses or working at businesses. I think now we're going to move on to challenges and concerns, and I'll hand back over to Sahib.
Thank you, Sachi. I think we've learned a lot there. There's a lot to skim out of this, and it's already in play. There's a lot that has been spoken about on this stage in terms of the impact of business. I've learned a lot as well, running a business. Thanks, James, for the international perspective. And we have many members in our society here that run businesses across the continent. So a lot to consider there. The next round, and to the panelists, I know you've prepared well, but I'll ask you to keep it a bit brief in this round, and so we can have a good closing at the end. Are the challenges and concerns, and I know this is where people like speaking a lot, because there are a lot of challenges and concerns. So first off, Sandeep, what challenges do businesses face in understanding and implementing the tax changes introduced by the Finance Act, and how can tax consultants like yourself address these challenges?
Yeah, thanks a lot, Saib. I think the first challenge is that businesses might not understand the impact the tax changes have. So, for example, the ETIMS in itself, most businesses are still accepting to do business with their value chain, who are not giving them compliant invoices, and they're happy to continue with it. That would lead to a challenge for you, as mentioned before, that element of expense that you're incurring will not be tax deductible. So if you're happy to continue that way, then you're happy to pay tax on it on behalf of someone else. The other challenge, I think, is that just generally keeping up to date with what's happening. I talked about the affordable housing levy and the impact it can have on businesses, and the other one that's coming up is the social health insurance fund. A lot of businesses who do provide insurances for their employees are now thinking that, do I really need to pay a premium if the social health insurance fund is, it's my tax, it's my levy as an individual, I paid from my net salary. So in order to save costs, some businesses are thinking, but most are still happy to do it. So I think then in itself would be now an operational challenge for the business to think about. But generally just understanding what's happening in the different landscapes. It doesn't have to be income tax specific, But even the changes in laws and regulations, the whole migration of iTax to a new system is going to cause a big challenge for businesses. If businesses are not aware about that, they'll continue in the status quo. The whole amnesty issue, the issue about you, if not having any principal taxes, you can get an amnesty for the interest and penalties, which is a big deal for businesses. So you'd asked me to keep it short. I'm going to keep it short. So I think for me, just keep upskilling and keep abreast of changes in the whole tax and regulatory landscape.
Yeah, and I think to echo your sentiments, Sandeep, I think the members of the public, I mean, using the services of tax consultants becomes more and more important by the day, so as to ensure that your businesses are well run and you are not facing the challenges that Sandeep speaks about. To Fred, related as a tax consultant, are there any concerns or uncertainties regarding the interpretation or application of specific tax provisions that you have seen in the Act?
Thank you for your question. I think over the recent times where we have seen changes coming in, we as consultants and also taxpayers in general, sometimes we even maybe ask ourselves whether did the one maybe type in, maybe skipped a page, or maybe the one who was drafting, maybe they didn't fully internalize on these issues. Yes, there are uncertainties which comes with the Finance Act 2023, and maybe to begin with, which is a major concern, is that over the past years we have seen KRA trying to push the aspect of police or policing over the issues to taxpayers, where in the past years we have seen, I think all of us had interacted with the VAS, where we were all required to make sure that our suppliers had declared the sale to you, so that now you are able to claim that input. But in the Finance Act 2023, we have seen them now making it compulsory for you to have an invoice, and also for your supplier to declare that sale to you, so that now you are able to claim. Now here comes the eTIMS. Now we wonder, now you as the customer, now should you also go and check more whether now your supplier is also eTIMS compliant, so that now you can claim. Or another concern around the eTIMS aspect is we ask ourselves, is this eTIMS aspect trying to push out the mamambogas, the boda guys out of the business? Because, I mean, for most corporates, they will end up now doing their purchases from eTIMS compliant suppliers. But you see, the mamambogas who are now trying to make it, they are trying also to earn their income. Now they are left wondering, if people won't now come and buy from me, then how am I going also to build Kenya? So that's a major concern surrounding the eTIMS. Even though there was draft regulations, which was somehow it found its way to the public space, though it has not yet been gazetted, where they proposed for people below 5 million turnover not to issue eTIMS, but we are yet to see what the final regulations will look like. But these are the uncertainties surrounding the eTIMS aspect. Another thing is on interest restriction. Yet here we have a company which is part of the MNE, the multinational entity, and they are getting loans from their non-resident parents or entity. And now with this Finance Act, we have noted that the interest restriction now will apply to non-resident loans. Now the question is, the Finance Act has now come in and say you will be able to claim this interest expense within 3 years. Now taxpayers are left wondering if I'm able to claim this interest expense within 3 years on all foreign loans. Then the question now, which now will come in, is now for this interest expense, if I won't be able to meet the 30% restriction and the 3 years is over, will that mean that this interest expense, which has been restricted, will it just go away like that, or what will happen next. Same case will also apply to the foreign exchange losses that has been realized by these entities. The Finance Act now allows you to restrict it, then you assess your 30% EBITDA for a period of 5 years. What if now the 5 years lapses and on all that 5 years your EBITDA was more than 30%? Then the question is, will also that realized losses that you had already restricted, will it also go away just like that, and you had already incurred and realized such kind of losses from your forex transactions? Another uncertainty is on withholding tax that you had already paid to your non-residents, and you happen to undergo an audit through KRA. Remember, the tax regime here in Kenya is a self-assessment regime, where now you assess yourself, and then now KRA will come back to review whatever you declared as your declarations in your tax returns. What if now they come and they happen to pass an adjustment on your tax declarations that you had? For example, on TP, maybe you are having cross-border transactions, and KRA would like to pass an adjustment on your transfer pricing. And once they make that adjustment, there was this withholding tax that you had already paid to your non-residents, and you'd like them to come and factor in that withholding tax you had paid to your non-residents. The KRA or the Finance Act now comes and disallow you on that. You won't be able not to come and adjust for that withholding tax that you had paid to your non-resident. Then this brings the question, is this acting fairly? Because if you'll allow me to come and adjust for withholding tax that I paid to residents, what about these foreign investors who come in, set up their entity, and they have already withheld when they are making payments to their non-resident entity outside there? Then under an audit, you won't be able now to adjust or to pass that adjustment. You see now that makes it even more unfavorable for these foreign investors to come and invest in Kenya. However, there is a leeway when it comes to this uncertainty, where now the Tax Procedures Act will always give you as the taxpayer an opportunity to seek for private ruling from the KRA, so that now you can get their interpretation of these provisions better. Because once they issue you with a private ruling, this ruling will be binding on the commissioner. So whatever the commissioner states in that private ruling, so that now you can get the certainty or to remove the lacuna among these instances. Now that's why you'll be able not to have an understanding of how KRA looks at it, to avoid such kind of uncertainties when it comes to you now putting in your investment. Thank you.
Thanks, Fred. Quite comprehensive.
So I'm sorry, just wanted to add one point on the eTIMS, and maybe I think it's important to demystify eTIMS. So there are 4 solutions as far as eTIMS is concerned. The one is that you have to get onto the software, but now the challenge of the VAT, remember eTIMS has got nothing to do with VAT. Whether you're VAT registered or not doesn't matter. You have to onboard eTIMS. I think that's a very important clarification. Secondly, if you're trading with people that are not registered for VAT, then there's an option that KRA has now rolled out. If you do *22#, they would be able to then generate that eTIMS invoice on your behalf. So I think that's very important. The last one they're still working on is reverse invoicing, which means that you, as the person receiving the invoice, the services, can generate an invoice on their behalf. That's what the large manufacturing companies want, to have control over their expenses. I think the one other point on the VAT returns, I don't know if you're aware, but they are now auto-populated going February onwards. So if you go to iTax and you sit down, load auto-populated return, whoever you have supplied to and whoever you have received a supply from should be in that return. Your job is to validate. Now it comes to the point that Fred was making. You could have received an invoice, but it's not in the VAT return. That's where you spend a lot of time trying to just, match the two. So I thought it's important for that clarification.
Yeah, thank you, Sandeep. I think the government is trying. My recent interaction with eCitizen for payments, they have made it easier. So they are trying using short codes and the likes to make this new regime more palatable for the common Mwananchi. But speaking of this from a legal perspective, James and Ishi, and maybe comparing what we are talking about, all the challenges this act brings, and comparing this to an international perspective, is it unnecessarily complex? And both in its interpretation, its implementation, there seems to be a lot of hurdles we're speaking about here on stage. What are your views from a legal perspective, especially comparing it in an international dimension?
I think for me, I would like to echo what everybody else on the panel has said. The interpretation needs to be done at a very grassroots level. Public awareness needs to be made about the act, and that is one of the biggest challenges. When we even talk about the housing levy, that lady sitting at the kiosk, that Mama Boga, what does she understand about the 1.5% housing levy that she's supposed to pay? So interpretation is one thing. One of the other legal challenges that I think would come up is the myriad of court cases that we're going to see coming up in court because of this act. Basically because people don't understand it, people are not going to pay the taxes the way they should. Even when you look at something like the interpretation of immovable property, in one of the land acts and the other property acts, immovable property is just known as land and the property and the buildings. But now the Finance Act goes ahead to say it is anything attached like a mortgage, a lien, a charge on that land. So even that interpretation is very important, and from a legal perspective, I think we are going to see a lot of court cases coming up in court, especially because now we're at conflict with the government, where the government says one thing, the Supreme Court is saying another thing, the Court of Appeal is saying another thing. So we are going to find a lot of legal cases, and yeah, we are going to find a lot of legal challenges in this act.
Let me just address a point here on access to justice, because here you are faced with a very determined tax authority that is got very high targets and who are obviously sometimes demonstrating very aggressive behavior. And then you have the law that comes as amended, says, for instance, if you file an objection, you know, KRA have 60 days to review this. And in experience, what we are seeing, those 60 days, these people are overwhelmed. So what is happening more and more is that by the 60th day, all you get back from KRA is a confirmed assessment. That's a concern. KRA wants to push what they're calling alternative dispute resolution, which means after that you go and file an appeal. KRA wants to engage you to then say if you want to settle, you need to pay some money. But then we've been seeing in successive finance acts this issue being pushed about that if you're going to then appeal to the High Court, that then you need to deposit some amount. And there's been a lot of pushback on this, because if you think about it, some of what you see from that aggressive behavior is sometimes assessments that you cannot even relate to. I've often had people say, look, why don't KRA run my business and send me 30%, you know? It looks like the sort of things that they're anticipating are way beyond what a business would be obtaining. So we are seeing concerns around those issues of access to justice. And so obviously the need for proper legal counsel to handle and to help navigate these issues. But there's certainly a big push. Difficult to say how we benchmark with the rest of the world, because these are our home-based issues. This is about us pushing back when we see certain things like those, that we should not be prevented, for instance, to go to the High Court and to push your case and your dispute until such a point as you feel that you've obtained justice.
Thank you, James. And the panelists for your views on all the challenges that this Finance Act has brought onto the Kenyan economy and the businesses that run within it. Now, on to the last part, just to manage expectations. We had a 4-part session. We are on the last part now, which will be handed by Sachi, and it talks about the SME space. So again, we're looking at business, but we're looking at small and medium-sized businesses, which is the future growth of the Kenyan economy.
Thank you, Saib. Thank you, panelists. We're running a bit out of time, so I'm going to ask everyone to keep this last round quite brief. We're touching on SMEs. So I'll start with you, Sandeep. How are SMEs specifically affected by the tax provisions of the Finance Act, and what tax planning opportunities are available to them?
Yeah, I think thanks for that. I have talked about the effect of taxes on businesses, and that also includes the SMEs, but maybe in terms of taking opportunities for tax planning, a lot of family businesses and enterprises are considering structures. So where do I structure my money from? How do I go to a low tax to a tax haven jurisdiction? And I think James talked about the common reporting standards, which essentially in a nutshell mean if you undergo a revenue authority audit, they can get your information from any other country that you do operate in. I think that's very important to understand. So tax planning does not mean tax evasion. Very important. But businesses are now trying to structure their holding companies out of Kenya, including to some going even to Rwanda, because Rwanda has much better tax regime. They actually intend to take the personal income tax. They're at 28% already. They want to go to 20% in the next 5 years, whereas Kenya has taken it from 30 to 35%. Anyway, a different conversation. But for me, the tax planning really would be linked to compliance. So even as you look for different structures, where you can set up your businesses through, I think tax compliance would also be very important and right up there with nitrogen, just to ensure that your businesses do not suffer from, negative assessments by the Revenue Authority. Thanks.
Thanks for that. So whoever's planning a trip to Kigali, let me know. Fred, over to you. What assistance can tax consultants provide to SMEs in optimizing their tax positions and complying with the new regulations?
Thank you. I think for tax consultant, basically it's all about compliance. You have to make sure that the SMEs are always compliant to the tax laws. Remember, when it comes to taxation, it's all about interpretation of the tax law, because we are all guided by tax laws, either it's a VAT Act, Excise Duty Act, Income Tax Act. So as long for us as a tax consultant, we'll always help SME when it comes to interpretation of these provisions, so that they can comply with whatever is required of them. Next one is assisting and also reviewing their tax declaration to make sure that they are declaring what is the law provides. If this is not allowable for taxes, if it is allowable, we'll always advise on that. And the other one to also help SMEs be compliant is always offering representation when it comes to any assessment or any demand from KRA, where we will step in as consultants and help them interpret what KRA would like to assess on them, and also assist them in reviewing whatever KRA has come up with, so that they can close this matter amicably. Thank you.
Thanks a lot, Fred. Hadik, what strategies are you employing to ensure that stakeholders understand the financial implications and strategic considerations associated with the new regulations?
I think for most SMEs, staying ahead of compliance, which is what I think everybody else has said, is the biggest thing. If you're constantly up to date, you are doing a monthly check, or whether it's weekly, daily, whatever works for your organization. I think compliance is one of the most important things. And if you slip up on compliance as an SME, you will not, exactly what was said, that if you want to challenge that decision, you'd have to go and deposit that money. And I think access to finance for SMEs is very difficult. So to find that money would be very difficult for you to go and deposit it so that you can challenge a case. And I think that becomes one of the most important things. So if you're ahead of the game, and I think communication is the most important thing to say, that if you're going to communicate this, whether it's your staff or whether it's the management or even your shareholders, to say, I think I'm not settling, I may settle on a smaller margin, but I'm not going to settle on compliance or going to slip up on compliance. So I think it goes back to saying compliance is key, and that's what we should go with.
Sorry, thank you very much for that. And lastly, over to the legal experts, James and Ishi. Are there any specific legal considerations for SMEs in complying with the Finance Act, and what legal support mechanisms are available to them?
I think I'll give this one to James. He's more conversant with this.
Yeah, it's. Let me just say some things about. Like today, we're here to discuss Finance Act 2023. Kudos for the organization, but staying ahead of the curve probably means, Finance Act 2024. You want to organize a session for businesses in the community to engage, to get updates, and it's thinking about costs, how you keep costs down for small businesses that cannot afford expensive advice. Would probably mean you're inviting KRA to offer tax clinics, and they would do that when there is a sufficient volume of people who are present. So if you're going to send your finance people for a clinic here, KRA would be willing to do that if you want to do that at scale. Obviously, for us as advisors, thinking through ways to simplify, or what we can do perhaps through use of tools, AI, and other tools like system-generated things that would make it easier for us to offer advice, to offer perhaps transfer pricing documentation or things like that at a marginal cost, so that we can help at least with the compliance elements. Unfortunately, the law doesn't set any thresholds. We look at the transfer pricing rules that they're amending. Again, unlike other jurisdictions like Rwanda, there are no thresholds. So you could be having 2 transactions worth $50,000, and there you have compliance needs. So for practitioners, we have to think carefully also around, and we're actively doing that at ALN, to think about how do we not lock the door on just anybody who has problems at a lower level. And so I think it calls for us to be proactive, to be engaged. Like I say, we've talked about some examples of what we could do to continue to engage as the community, to invite friends as much as possible, to continually have this conversation. Let's not stop. Let this not be sort of your one tick the box and then you walked away. This is an issue we must be all actively engaged in as we go along.
Okay, thank you very much. I think that wraps up the questions. Just wanted to invite the audience to ask any questions to the panel, if they had any. Anyone? Can we get at least 2 questions from the audience? We want to see if you were paying attention.
Thank you very much for a very informative session. I have 2 questions. One is related to the implications of the Finance Act to, say, a religious institution like East African Ramgarhia Board or other institutions of that nature, and tax exemptions as well. The second question I have is on this act which changed, I think, in 2021 and then to 22, where the interest was not being allowed, and now you can claim interest even if you're making a loss. So whatever interest that was incurred during the year that they were not allowing, is there any recourse to that, or you just have to bite the bullet and carry on?
Okay, I said 2 questions. He asked 2, but I'm allowing 1 more.
Thank you, ladies and gentlemen, for a very informative session. My question is on the guidance we can have from the legal experts and on the current court orders. For example, we've talked a lot about the housing levy. There is a court order that we shouldn't be paying it. But on the other hand, our auditors and financial advisors are telling us that we should keep paying it. So where do we stand? It's a very gray area. Secondly, Sandeep mentioned earlier on the amnesty, the new amnesty. A few years back, we had an amnesty where we had to declare our foreign income and foreign assets. which we then input that information on the online platform. There has been no official response from KRA on that. So now that we're talking about a migration from the current iTax platform to a new platform, what will happen to that amnesty?
I think the questions are open to any of the panelists that wish to take them. The first one being about religious institutions, impact of the Act, and exemptions.
Yeah, maybe I can take some of them, and then Fred, I think you can. So I think the first one on the religious organizations, you do need a tax exemption if you do not want your investment income to be taxed. And that is a whole long drawn process. You would have to really prove that really you are doing donations or philanthropy for the people of Kenya. So it cannot be a members club. It has to be, that you can prove that you are making a social impact in the community, in the wider community. So I think for that there's a full application that you need to do, including attaching your audited accounts to prove that you are receiving donation income, attaching an entire booklet of your impact in Kenya, and then there's a special team within Revenue Authority that then review that exemption application, and then they can grant it to you or they can decline it. But in the interim, if you do not have that exemption, then and you do earn any of the income apart or and above donation income, let's say rental or I don't know, any other commercial income, then that would be subjected to tax immediately. And you would also be asked to charge VAT on commercial rent if you have not done so. So that in itself is still in the law. They have not withdrawn those exemptions, but they do expire within a certain time limit. I think the issue on interest expense that you talked about, the EBITDA, yes, the initial, the way the initial law was worded, it caused a lot of, tension within the local borrowers and said, so how do we then, we are borrowing from a bank, for instance. We are not foreign held, it doesn't make sense. And it was not even against international best practice, so they did change that. The only challenge is, and which is something I think different consultants have different opinions on, is that if I have now a full year end and half of it falls in that period and half in this period, can I take advantage of the full thing? We look at it as a year end, and I'm saying that that is what the law provides. And I could support that position, but if you go to a different consultant, they might say, look, you might want to apportion that interest expense, do not allow the period that you are not required to allow, and then allow the period that falls now in 2024. But if you're doing a tax computation, it's for the year. And I do have my colleagues seated there, and if you do have further questions around that, we can take it offline. Now, the other issue I think that came up in terms of the amnesty application. So you're right. The reason why the government at that point in time gave this amnesty, and you could probably think there's a similar issue that happened then that's happening now in terms of foreign currency. Their aim was for the taxpayers to bring back the dollars or the pounds or euros back to the country to stabilize the foreign currency. And in reality, you're right, very few people that we know of actually got the end-to-end certificate, but a lot of them are still hanging. The way the current amnesty works, it's really largely automated. You do not even need to have a consultant, by the way. If the principal taxes have been paid, the waiver applications are coming automatically into your emails, into your iTax ledgers. So if you have a penalty outstanding, don't even bother with making applications. They will see if you do not have any principal, then they will send you the amnesty application. What we had advised some of our clients, if you want to fast track it, you can pay 1 shilling, just a shilling. And then you see within 6 hours, you have the amnesty. So it's very important. I don't know if I missed out a question. Oh, the one on the housing levy, yes. So, look, we also told our clients, do not pay because you're not required to pay. Even KPMG as an employer, stop paying housing levy in the interim. The issue is that now if the bill, remember the issue with the housing levy was the way the law was crafted, and maybe James and Ishi can talk more about it. That's why it was stopped. But now that there's a bill and the parliament has passed it, in majority, it's now sitting with the Senate. I'm saying this is our opportunity. I think the deadline to make applications is 29th. This is the opportunity. Like he said, you don't have to go individually. You can write an email to me if you've gone through the bill and say, look, I'm not happy with this provision. I can craft it in a more professional way. There's no issue. But tell me what your problem is. Send me a note, and then I can do that on your behalf. And of course, that's not chargeable because that's our social impact. So I think that are the 4 questions that I hope I've got. But if there's any other panelist who wants to add on.
Thank you, Sandeep. Maybe I can add more on with regards to exemption. Remember, there was something which was also added by the Finance Act 2023, where with regards to, for you to be granted an exemption, you really need to demonstrate that this organization is of public character, and also you really need to demonstrate that no benefit is accrued to a particular individual, but rather you really need to show that the benefit accrues to all members and not to a particular individual for you not to be able to be granted that exemption. And maybe also to, as Sandeep has also put, with regards to interest restriction, remember, you are not so certain on what will happen to year 3, year 4. Maybe year 3 and, the second year and the third year, because you are able to assess your 3 years to see whether you are above the 30% threshold. You don't know whether your second year or your third year you will be above 30%, and that leaves you in an awkward situation where you won't be able not to come and allow this interest restriction that you had restricted earlier. So just for you to be able to enjoy fully, because they have not said whether you will apportion it to over the 3-year period so that you could be claiming it, or you claim it in the first year. If you assess yourself and the first year you see you are below the 30% threshold and you had restricted interest in the first year, you can come and claim it as long as you don't exceed the 30% threshold. And maybe finally on the housing bill or the housing levy, remember the High Court had pronounced itself that no deductions should be made by the employers. And basically on that, they were arguing that on the basis that it was unconstitutional and it was brought by the Finance Act. But now they're trying to legislate this as affordable housing bill so that there could be that legal framework. We don't know whether now the case has already been appealed to the Supreme Court, whether now Supreme Court will say now there's a legal framework, now we should go back and make sure that this housing levy is being deducted. But as at now, the Court of Appeal already pronounced itself, and the affordable housing is still in its bill stage. It's not yet an act, so we'll go by what the Court of Appeal pronounced itself when it comes to housing levy. Thank you.
Yes, anyone else wish to add anything to that from the panel? Yeah, so thank you, panelists. I think the discussion is broad, and I think some of the issues we've spoken about are pertinent in terms of other levies. I think that's really taken center stage. Just sitting on stage here, I've read a Supreme Court ruling that the NSSF Act is not valid, which has just happened this week. So reverting us back to the NSSF Act of 1985. So I think there's a lot to be spoken here in terms of how introductions of levies are brought in. And as much as they are for the betterment of society, I think these challenges make running business and personal incomes very complicated. I think I'll hand over to the MC now. Thank you very much.
Can we please have a round of applause for our panelists? Kindly take your seats back in the front row. Thank you. We're all going to leave a lot smarter than we did before walking in. Once again, thank you, esteemed panelists, for an enlightening session about the Finance Act and the impact on business and the economy. And thank you, Sahib and Sachi, for asking the right questions. If you have any more questions, you can meet our panelists one-on-one at the dinner hall. I would now like to call our Deputy Coordinator, Sahib Singh Sethi, to give vote of thanks.
Waheguru Ji Ka Khalsa, Waheguru Ji Ki Fateh. Ladies and gentlemen, for those who don't know me, my name is Sahib Sethi and I'm the Deputy Coordinator for the Young Professionals Group. As we draw curtains on today's enlightening panel discussions, I stand before you imbued with a sense of gratitude and inspiration. On behalf of the Young Professionals Group and the East African Ramgarhia Board, I extend my heartfelt thank you to each and every one of you for making this event a resounding success. Firstly, our deepest appreciation goes to our esteemed panelists. Your insights into the new Finance Act in Kenya not only have enlightened us, but have also empowered us to navigate the complexities of this new legislation. Your expertise and willingness to share have been invaluable, and for that we are profoundly grateful. To our diligent organizing team, your tireless efforts behind the scenes have not gone unnoticed. It is your dedication and hard work that has transformed this vision into a reality, setting the stage for today's fruitful discussions. A special thanks to the attendees, both in person and online. Your participation and engaging questions have truly enriched this discourse, reflecting the vibrant spirit of our community. This event has underscored the importance of unity and collaboration within our community, a principle that sits at the very heart of the young professionals' ethos. As we navigate the challenges and opportunities presented by the new Finance Act, let us remember that our strength lies in our collective effort. Working closely as a community not only fosters our social, personal, and business growth, but also builds a resilient foundation for our future generations. This collaborative spirit defines us, propelling us forward as we endeavor to make meaningful contributions to our society and economy. In closing, let us carry the insights and knowledge gained today, applying them to our respective fields for the betterment of our community and for our beloved country, Kenya. May we continue to support each other, share knowledge, and grow together. And I would now like to invite the following people to take the stage to present a small token of appreciation to our panelists. This is a gesture of humble acknowledgement of the invaluable knowledge and insights they have shared with us today. May I please have the President of East African Ramgarhia Board, Mr. Surinder Singh Sira, to present his appreciation to Mr. Sandeep Singh Main. Trustee of East African Ram, Mr. Manjeet Singh Sethi, to present to Mr. James Karanja. Sorry. Next, may I have the chairman of the Ramgarh Youth Association, Mr. Himmat Singh Gahir, to present to Mr. Hardik Oza. Next, may I have the Principal Coordinator of the Young Professionals Group, Mr. Pavraj Singh Sira, to present to Mr. Fred Kitonga. Finally, may I have the member of the Young Professional Steering Committee, Ms. Priya Kaur Manku, to present to Ms. Ishikaur Kalsi. Thank you once again for your participation and contribution to today's discussion. We look forward to many more engaging and informative events in the future. Thank you very much and good evening to you all. Waheguru Ji Ka Khalsa, Waheguru Ji Ki Fateh. Just before we close, I want to just add that we will be having our second event as the Young Professionals Group on the 23rd of March. It's a careers fair targeted to obviously people starting their careers, looking to get into university and just, looking to understand more about what they can do in the future. Thank you. God bless.
Thank you all so much. Dinner is now served.